We want money. Everybody wants money. It's brought down a lot of good people over the years, Dominic, hasn't it? Good morning.
How are you, Darren?
The filthy lucre. That's what they call it, and yes. we try and make as much as we can, and sometimes things go sideways.
Most times they go well.
Yeah, and that's what you're about, just making things go well.
We try and do our best. And speaking of getting best things in life for free, sometimes you've got to pay a little bit. And yesterday I was at my favourite IGA Richie's store, and I got some beautiful Lindt chocolates. Have you had one yet?
Oh, I had one. They are the wrapped up balls of sweetness.
They're half price at the moment.
Are they?
So that's why
save us money.
I know, there you go. Anyway, I better get on to the market update. Overnight, US stocks rallied to all-time highs, with the Dow Jones Industrial Average putting on 432 points, or 1%, to 43,819, whilst the S&P 500 was 32 points higher at 8,173, and the Nasdaq rose 106 points to 20,273. Across the Atlantic, London's FTSE put on 0.72% to 8,799, with the French CAC, German DAX and Italian MIB all rising between almost 1% and 1.7%. Gold dropped $60.40 US an ounce, or 1.8%, to $3,287.60, following the International Atomic Agency's confirmation that Iranian's Fordo nuclear what are those things called? The spinning things. Centrifuges.
Yes.
Were no longer operational. So that was a big plus for people who were having a bet that there will be a higher escalation in the tensions over there. Looks like it's going to calm down a bit, and the demand for the safe haven asset gold dropped a bit. West Texas put on 28 cents to $65.52 US a barrel, and Brent crude was basically steady at $67.77 US a barrel. And the $A is lower against the greenback and is currently buying 65.29 US cents, with the ASX 200 SPY 5 points higher following Friday's effort, where our market gave back 37 points to close the session at 8,514.
If you would like to speak to Dominic about retirement, about superannuation, about wealth and creating wealth, 133 693 is the number. Call now and you'll get straight through. Dominic is taking calls. Dominic Alafaci from Collins House. Super. Things are changing all the time, aren't they? There's always a little super stories in the news. Yeah. Some are insignificant when it's concerning you, but others aren't.
Yeah, there's a lot of changes going on. Mainly the Socialist Labor Party wants to get more of our money.
Yeah.
And those people who have inherited money and have got a lot of super, they're going to stick their claws in there. Those who have, unfortunately, it also includes those who have worked really hard to build their super. So I can understand the socialist view of, look, you've inherited some money, you're a wealthy family, you can pay a bit more tax than the average Joe.
Because we've overspent and mismanaged your money.
No, I wasn't going to be that cynical, but I was just thinking from a perspective of everyone's a little bit of a socialist, even myself. Like those with lots of money should pay a little bit more tax, I think, except if it's inherited. But except if you've worked 3 jobs, haven't gone on any holidays, worked extremely hard, you're sucked into that same socialist view. So that's the thing that stinks about the new super rules. And for years, for decades, they've influenced independent advisors to recommend to customers to put their money in super because there were tax benefits. Now, once they've got the big pension pots in place, they say, we might just get a little bit more tax out of it. And that's the thing that stinks.
Yeah,
it's simply un-Australian and it's unfair.
Yeah.
But how do you detect if someone's inherited money or someone's worked hard? So I hold an olive branch out to the socialists when they're having their think tanks.
In your vast knowledge of experience with people working on retirement plans and coming to see you for advice, have you come across many people that physically have the bags of cash and the bars of gold because they don't want to pay tax on any money that they've got sitting in a bank?
I have unfortunately had some people that have got literally cash under the bed, and I've told them, look, and I've got to be circumspect here. I told the lady who lived alone, she knows who she is, to either get one of her relatives or get me to do it. I don't know, someone, get Armaguard, someone, because it's a lot of money, to bring it to the bank, and I will sign a declaration, because I know that she's built it up over years. She hasn't stolen. It's not the proceeds of drugs or a crime. So I would be able to verify under the anti-money laundering and counter-terrorism legislation that the money is hers.
There is such a thing. Wow.
Yes, we're obliged to report any transaction.
What is it, the anti-money
laundering and counter-terrorism legislation?
Right.
Anyway, so we have to make sure we're not helping crooks with their money, or launder their money. So I can do it, and I hope she's listening, because if someone just happens to see her and knock her on the head one day and go into her apartment, it's actually, I'll say it's an apartment, they're going to be very, very wealthy.
Well, she needs to sort that out. Yes. And we need to sort some calls. 133693. If you would like to speak to Dominic, call now. There are all of the lines free. 133693. For you. And to Mary, good morning.
Good morning. How are you?
Good, Mary.
Just a quick question. I just wanted Dom's point of view. I'm 59 this year. I've made a decision probably late in life that I've decided to buy a house out of my super.
Do you own your own house already, Mary?
I do.
Okay, so you're going to buy a new house and sell your old house?
No, not at all. I'm going to keep my house and use a portion of my super money. So my super's been restructured, so it's a self-managed fund now. And I'm going to take a portion of $300K out of my super to buy a house.
It won't get you free of land tax.
Yeah, Mary, I'd really, if you've already signed the documents, well, that's history, but I'd really rethink that strategy, because if you're going to buy the property in the self-managed super fund, then that's sort of okay, because you're going to shelter it from capital gains tax down the track. But if you're going to take the money out and buy it in your own name or
No, I'm not. It's going to be part of the super fund.
Okay, well, how big's your super fund all up?
Oh, 650.
So you're going to have roughly half your money in one property. Not very well diversified, and you're going to borrow as well?
I'm going to borrow. Yeah, I'm going to borrow 300 and take out 300. Well, the 300 is my super. Yeah.
Are you buying off the plan?
Yes.
Yeah. Mary, on average, people who do what you do take 12 years to get their money back.
Yeah.
Yeah.
And I think someone sitting opposite me agrees.
Don't do it, Mary.
I can't say that. Revisit that. But look, it's not. If you're lucky and you buy a really good property, you'll make a killing. But on average, people who do, my experience is people who do what you're doing don't usually make any money for 12 years, because it takes about 7 or 8 years to break even on buying property off the plan. Now, don't bash me up, real estate agents, but that's just my experience.
Thanks for the call. To Andy, good morning.
Yeah, g'day. This is a question about whether to invest in the US or keep investing after the top stock prices yesterday. I've got about a quarter of my assets in US shares and about a quarter in US government bond ETFs. And I'm sort of thinking that I should be flipping the US bonds into US shares, but their market's getting a bit toppy, I think.
Well, look, Andy, I've only got a minute and I've got some other callers. If you leave your details off air, I'll get Dr. Michael Saba, who's a portfolio manager, to give you a call, because it's exactly what we're discussing at the moment.
Right.
We've got about 35% of our growth assets in our growth portfolios in US stocks, and we've got some in US bonds. So if you leave your details off here, I'll get Michael to give you a call during the week, because it's a topical question and it's quite complex.
Hold the line, we'll get your details, Andy. And a quick one from Judy, good morning.
Oh, hello, is that me?
That's you. You'll have to be really quick.
How are you? And thank you for taking my call
Straight
quickly.
into it, Judy. Yeah.
Dominic, I wrote to you a while ago now, and it was about the grandchildren leaving a certain amount of money for them separately to the super, I remember. And you put me on to Matthew and Simon Giuliano, and they've been amazing.
Right.
Amazing. And my question is, just quickly, I read or saw yesterday for your house and super to be put into a trust as beneficiaries rather than, do you know what I mean?
Leave in your name.
Mayor,
Judy, in 30 seconds or 10 seconds, I don't like the idea. Please leave your details off here and I'll give you a call.
Sorry to rush you.
It's about 4 seconds before I'm going to say goodbye.
Yeah.
1, 2, 3, 4.
Thanks for bringing in your Lindt chocolates. We'll talk again soon, Dominic.
Looking forward to it, Darren.
Dominic Alafaci from Collins House. That's collinshouse.com. Check it out.